Okay, let's unpack this. Nike, it's obviously huge. A cultural icon, right?
Absolutely. More than just shoes.
Yeah. And the idea that its stock price, can tell us so much about the health of the whole U.S. economy, that's what we want to dig into.
Exactly. It's fascinating how deeply the swoosh is kind of woven into the economic fabric. Our mission here is really to dissect that connection.
How the stock reflects consumer moods, spending, that sort of thing.
Right? The vitality of the American household, almost.
And then there's this wild event, June 26th, 27th, 2025, Nike stock NKE.
Oh, yeah.
It just explodes. Up over 18% in a day, biggest gain they've ever had.
Historic.
And here's the kicker, this happens right after they report, frankly, a pretty rough quarter.
Right.
Revenue down 12%, net income basically wiped out, down 86%.
Yeah, the numbers themselves looked bleak.
So how does that work? Good news from bad news?
Well, it's this better than feared scenario. Results, they were tough. But analysts, they were bracing for even worse.
Oh, okay. Expectations?
Heavily lowered. And crucially, Nike's guidance for the next quarter, their forecast, was only for a mid-single-digit revenue dip.
So less bad going forward.
Much less bad than the market feared. It really raises that question, doesn't it? In this market, sometimes bad news, if it's less bad than expected, becomes good news.
It really flips things on their head, and the reaction was immediate, right? Wall Street?
Oh, completely. Analysts rushed up rate. You had HSBC issuing its first buy rating in, over 3 years.
Wow. And retail investors.
Stock twits went nuts. Hit a year high, like 98, extremely bullish.
Yeah.
Message volume jumped, something like 1,77%.
1,700%. Like that. Everyone's buying the comeback story.
Yeah, and this plays right into Nike's brand power,
Yeah.
Their whole identity is success, accomplishment.
Right. Winning.
So record stock rally, that's not just finance, it's brand storytelling. It gives them this psychological buffer.
A buffer for what? Raising prices?
Exactly. For those surgical price increases, they need, to offset things like that potential billion-dollar hit from U.S. tariffs on imports.
Okay. So the stock jump helps the brand image, which helps them manage costs like tariffs. Makes sense. But let's bring it back to the listener. What does this mean for your wallet?
Right. The wealth effect.
Explain that a bit.
Well, the basic idea is when asset prices go up, like your stocks, maybe your house, you feel wealthier, more secure.
Even if you haven't actually sold anything?
Exactly. And that feeling makes you more likely to spend, especially on discretionary things, non-essentials.
It's like maybe a new pair of Nikes.
Could be. And studies actually show this. For every dollar increase in stock wealth, spending can go up between like 2.80 cents and sometimes as much as 34 cents.
That's a pretty wide range, but it's a real effect.
Definitely. For those discretionary items.
And Nike itself is putting money back out there, right? Dividends, buybacks.
Oh, yeah. Fiscal year 25, they returned $5.3 billion to shareholders. That's $2.3 billion in dividends, $3 billion in buybacks.
And they keep raising that dividend.
23 straight years. They're on track to become a dividend aristocrat. Shows commitment.
So there's direct cash going to investors, potentially fueling some spending. But what about the indirect effect?
That's maybe even bigger. Nike is in the Dow Jones. It's in the S&P 500. It's highly visible.
You see it on the news all the time.
Right? The evening news effect.
Mm-hmm.
Even if you don't own Nike stock personally, seeing a big familiar name like that doing well, it just kind of subtly boosts overall confidence in the economy.
Like a rising tide lifting the mood.
Sort of, yeah.
Yeah.
It acts as a proxy for how things are going.
And beyond just mood, Nike acts as a bellwether, right? Indicator for the consumer sector.
Definitely. Their earnings reports are incredibly detailed. You get data on different regions.
Like that 21% revenue drop in Greater China you mentioned?
Exactly. Plus, different sales channels, different product types. It's a real window into consumer health.
Okay. And what about jobs, their impact there?
It's huge. Direct employment is around 79,000 globally, with over 11,000 just at their Oregon HQ.
But the manufacturing is outsourced.
100%. So indirectly, you're talking over 1 million workers in the global supply chain,
Right.
plus thousands more in the U.S. doing logistics services,
And they have that supplier diversity program too.
right? Over 1.4 billion spent with diverse suppliers by fiscal 23. It's a vast network.
Right.
But that model does create vulnerabilities, doesn't it?
Yeah, what are the big ones?
Well, clearly, geopolitical shocks, like those tariffs we talked about, potential billion-dollar annual headache, and, reputational risk from labor practices way down the supply chain. It's hard to oversee everything perfectly.
Right. It's a complex web.
Hmm. Which brings us back to this idea of the swoosh in the system.
Mm-hmm.
Nike's impact isn't just linear. It's these feedback loops,
Influencing sentiment, spending, market trends, jobs.
Exactly. The company's health and the nation's economic pulse are just deeply intertwined.
So wrapping up, watching Nike's stock going forward, it's more than just tracking a company.
Absolutely. It's a real-time case study,
On corporate strategy, yes, but also consumer psychology, those big economic forces.
all playing out.
So for you listening, whether you're an investor or just trying to get a read on the economy, keeping an eye on the swoosh, it's going to be pretty key to understanding where the American consumer might be heading next.